What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we're going to do a fun one. We're going to look at a meme coin project that might be a great one to practice swing trading on. But before we begin, please understand that this is definitely not financial advice. Anything I say or do in this video could cause you to lose all of what little change you have left in your pockets, like you ran it through the washing machine. Okay, so this is GROK, and apparently it's a meme coin. I don't know much about it, other than everybody's been yapping about it, okay? And it doesn't have a whole lot of price history, which is something that is a strike against it for me because I like lots of price history. This thing just started out on TradingView here in November of 2023. It probably had trading before that, but by the time it pops up with data here, it was at a price of 0.001. Now imagine if you would have bought this sucker at that price and then look what it hit somewhere around the peak. We're talking 2,300%. That's not bad. That's not bad at all. And so since everybody's been yapping about it, I figured, well, I'll take a look. And I decided I'm not buying it yet, but there might be an opportunity once we slide into the next correction cycle with the market. And it's going to happen. Everybody thinks that everything's going straight up vertically from here, and it ain't. So get that in your head right now. Let me show you what I would do and how I look at this chart. So it's an easy to read chart. It comes out at 0.001. It makes a massive run going 20x up to 2 cents, above 2 cents. Then it corrects and it finds a base down here at nearly a half a cent, goes on another run. Makes it all the way up to what? 2.9, almost 3 cents. That's absurd. Very absurd. So that means you went from 0.5 to 3 cents. So that's a 6x. Not too bad if you were swing trading, if you missed this peak and then you were patient and you waited for a correction and then you bought it down here, rode it to this peak and bailed out. That is how you swing trade. Now we're talking an amount of time of what? Let's see here. If you bought in this area, somewhere in the area of the beginning of the month? No, the 18th. Okay. Actually, this is this year. Why am I thinking November of last year? This thing just came out, or this data is just fresh from this month. So this is making some wild movements. It's very volatile. We like volatility because that means that you can jump in and get out on these wicked swings. So if you would have bought in on the 18th, you could have sold out on the 28th with a 6x. So what do you do from here? How can this be played? Well, it looks like we had this zone where price stayed stuck high and it would not come out of the overbought zone. Look how many times it tried to fall out and it just jumped back up above the 80 line. 1, 2, 3 times that it popped back up above the 80 line. Now we're falling out again. But I'm thinking that this is where the correction starts. And why do I say that? Well, it's because of this thing right here. So if this plays out, this is a crossover. Whoops, I want to circle. Let's circle the crossover. There's the crossover. That's not very complicated. If that blue line stays below that orange line, and then after that point, let's say that these lines continue on down until they cross underneath the 0 line on the MACD, that might bring us our next buying opportunity. So this is what I'll look for, something like this, okay? Notice that the last time that it was at a peak was here, and there's the peak price. See, this is not rocket science, guys. And then you had a peak here on the stochastic where there's a lower high, so that confirmed that it's correcting. And then at this bottom point of the stochastic, we noticed that it was printing the biggest red bars on the histogram right there. Well, that coincides with the low point. And then it tries to make its way up here, but we had another stochastic peak that brought not too big of a return in price, and then it came back down, full cycle. There's another bottom point. So you had two opportunities. One, two, to buy at the stochastic bottoms. By the way, this is on the 4-hour chart. So then we ramped up here, but notice how, like I said, it tried to stay up above the 80 line on the stochastic, but now we've got a couple big red candles on the price, and it looks like it's going to try to find this 50 EMA line or test previous supports. So I drew a green box, and this green box is the area that I call my strike zone. So when we enter that green box, I start to think about buying. And there's a possibility that we could find support either at this 50 EMA line or at the bottom of this green box. Reason is because that's where we had the support from all the previous activity here. And it was also the level where there was a resistance, a short resistance right there. Previous resistance turns into future support. That's how it usually goes when the market is trending on the general upward slope, okay? So I'm going to look for price to start to plummet. I'm going to look for it to do this and do the same thing of what I saw before. And once we get maybe towards the lower end of this channel, I might fool around and gamble and buy a bag somewhere around right here and then pray to dear God that it makes it out. Oops, let's get a line. That it makes it out and does one of these numbers. It makes a new high. Nothing's guaranteed, and there's a chance that it could fail the bottom of this channel and it could go lower. But 0.005 looks pretty attractive to me if it can make it that low. I think that would be good for a 5x at least, back up to 0.025. We've seen that high twice in the past. And so whenever you can get a swing where you're looking at 5x difference between the highs and the lows, that's where I start to pay attention. Okay, so let's scrunch this in a little bit and move it down and just see if there's a one-day chart that gives us any information, which it might not. Well, actually it does. This is a teensy-weensy little chart, but it kind of confirms what I was saying. Notice that after we hit the high, we just poked our head up here in the overbought zone, and this blue line, once it crosses that orange one, will confirm a correction. I'm going to wait for that correction, and then it's time to play. So let's just draw a line here. If we can come on back down like this and jump back into our box, then we can start to play for the next big run. Well, tell me what you think about GROK, why you like it. I'd sure love to know. There's just a little bit of information here on the CoinGecko site. It says that the max supply is $1 billion, $1 billion. And the total supply is 1 billion. It doesn't tell us what's in circulation though. Now, if half of that's in circulation, price could go down. If all of those tokens are in circulation, hey, now we can play. That would be cool. But the biggest thing I see here is that we've got a lot of trading volume. $14.6 million in the last 24 hours. So it's in play. It's definitely in play. All right, so that wraps up GROK. We'll go back to the 4-hour chart. Post your comments below and let me know what you think about GROK. Other than something to play around with, because it is a meme. It doesn't do anything. It doesn't fit any of the criteria that we have for the research group other than a nice chart. I want to hear about it. Let me know. Maybe you can talk me into wasting my money on a bag. But until then, I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And if you would like to help me defray these nasty costs for keeping the channel up, you may do so with the giving of a super thanks, and I thank you so much in advance. I really do. Well, all I've got to say is let's cross our fingers and hope that the bull run comes soon. And with that, this is Carlton, and I am out.